Okay, part two of my video for Monday the 4th of February. I should have added the Canada, the dollar versus the Canadian, US dollar versus the Canadian to my last FX report. But as you saw in part one, I was talking a lot about how moving averages have been working quite well for the Forex markets in what is mostly a sideways trending market. Well, the 55-day, the 100-day clearly working very well as support and resistance, and then once we broke down, we hit the 200-day moving average, which did hold for a couple of days. Now, yesterday we broke lower. Sorry, not yesterday, Friday we broke lower. So this looks like we're on our way down again. We did bounce off 130.64. Not quite sure why we would have bounced off there. What's that low? 130.44. But this looks pretty negative now, assuming we hold below 131.10, 131.20, which is these lows and this 200-day moving average, and then who knows, maybe we can get down to 129.80, 70. That really is quite a remarkable move, isn't it? The way we just collapsed from there, and then now we're all the way back down to almost retesting the November lows. Makes you wonder why we even bothered going up through November and December, only to wipe it all out in January. Let's have a look at the weekly chart. So we've got some support down here, good support. This is a decent trend line on the weekly chart down at 130.40 and the 200-week moving average at 130.40. So 130.40 is definitely the level to watch, and I do believe that's also around the November low. We just looked at that, 130.44. Okay, so that's the level to watch for the week. Try along, yeah, sure, why not? It's a good support level. We've dumped a lot. Maybe the bulls can give it a go. By the time we get there, it'll be a little bit more oversold than it is now. Not really oversold yet. So why don't we try that? And then obviously if we don't hold 130.40, let's say if we start breaking below 130.20, then we need to reverse into a short position and look for us to go down maybe as far as 129.60. What have we got on the daily chart anywhere down there? Oh yeah, we've got 129.67. So yeah, that would definitely be the next target. WTI crude has completed what looks like an inverse head and shoulders pattern. It's a bit of a weak right shoulder, but I don't think we can ignore it. This was confusing on Thursday. The spike up, long upper candle wick, red bodied candle did look quite negative, but Friday proved that to be a false signal, and bang, we're up. We've closed near the high of the week. We've closed through the neckline to what I do believe is an inverse head and shoulders, a bullish inverse head and shoulders pattern. What have we got here? Settling well above the 200-week moving average now, so yeah, I'd say this looks pretty positive. If I had to hold a position, I'm not uber confident, but if I had to hold a position, I definitely would want to be long this. It looks like we can head up at least to sort of 57.90, and maybe into the low $59 area. I mean, in theory, the measured target is pretty good, $10 to the upside. So in theory, we could be nicely hitting the 61.8% fib and the 200-day moving average up in the sort of mid $63 to $64 area. That would be the measured target. Could happen. Okay, you already know about the indices. I did a video at the end of last week, and it's pretty clear that the 100-day moving average is doing its job in the Emini S&P. We've got 61.8% fib as well at 2704. So that 2704, call it 2705, 2715 area is good resistance, and we topped at 2716, and we've closed a little bit lower, so doesn't look too good. You would be very nervous if you were long, or you should be nervous if you were long, seeing that. We don't have a particular sell signal yet, but I would be more comfortable being short than long. Now if we break above last week's high of 2716, then we can push up to the low 2740 area. Emini Dow Jones also getting tangled up in these in the 100 and 200-day moving average. As you can see, 100-day moving average about to cross out below the 200. That's a little bit of a negative signal. We got up to 25,143 on Friday. Okay, a bit of a surprise, but we didn't really hang on to the gains, and we've certainly closed below 25,000, which is a psychological number, if nothing else. Again, doesn't look particularly positive. We'd certainly have to break Friday's high for me to feel more positive. Nothing on the weekly chart. Let's have a look at the NASDAQ. As I said at the end of the last week, the NASDAQ had a really nice push up from, once we broke up through this important resistance area, used it as a base, off we go. So on the weekly chart, this all looks good, but then we go to the daily chart and we run into the 100-day moving average And again, failed to close above it this week, either on the Thursday or the Friday. This is what do we call that now? Is that a harami? A sort of a doji inside day, inside a blue candle. I think it's called that. You know, I'm rubbish with these names, but I do know what these patterns mean. So that's more a moment of indecision, where bulls are not pushing forward like they should do in a bull trend as we've hit the 100-day moving average. We're not particularly overbought, but right now the right decision would have been to get out of any longs, and there's no reason why not to have tried a short. All these three US indices being held by moving averages, and well, it just goes to show, these last two videos really showing how these moving averages really do have a significant impact on price. Look at the 55-day just holding nicely here. You know, if you did nothing else but have a scalping strategy based on moving averages while we're in a sideways trend, of course, doesn't work so brilliantly when we're in a trending market, but most of these markets are in a sideways trend, even the indices. It does really work quite well. And as if to reinforce the point, we're trading quite nicely. Well, we haven't touched the 100-day moving average, but we're certainly holding the 55-day moving average as support in the DAX. So obviously the level to beat for the bulls will be 11,400, get above the 100-day moving average, but I don't fancy their chances much. Let's have a look at the weekly chart. Okay, well, we're running into what will be an important resistance around the 11,400 area, and then we've got the 200-week moving average at 11,470. This trend line doesn't seem to be having quite as important impact as it should do, but I'm going to leave it on there. I'm going to show you the FTSE weekly chart because we've got the 200-week moving average. Can you see that red line there? And then we've got this thick trend line, which I've thickened out so you can see it, going back to November of 2016. So just over 2 years old, that trend line, very important, coupled with the 200-week moving average, actually also matching up with the longer-term 38.2% fib at 69.54. Where did we get to on Friday? We got to 69.71. We closed, I think, around 69.60, so I don't consider that a clear break. If we could get a gap higher on Monday, that would certainly be bullish, but we'd need to gap above the 100-day moving average, which is around 69.95. So 55-day moving average, not really, well, it has done a great job, not so great here. Let's see what the 100-day moving average does. So we get through 7,000, that's going to be a very clear buy signal for the FTSE. I guess the right strategy is to sell it in the sort of 69.50, 7,000 area with a stop and reverse above into a long position.